with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across this great nation. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Thursday, July 3rd, 2025. Shortened week for the markets this week as we celebrate Independence Day. So hope you all have a wonderful, safe, and enjoyable 4th of July weekend. Got to give a big, mega, super shout out to Tom. Tom, thank you for stepping in and helping out one of our folks here at BIG this past week. You are the man. We really appreciate you, bud. Hey, let's jump into the numbers, tell you what's going on out there. This market is getting a little silly, pushing quite a bit higher yet again this week. Just a lot of movement very, very quickly. So Dow Jones up 2.3% this week. S&P 500 up 1.7%. The NASDAQ Composite up 1.6%. And the Russell Small Cap Index really making a big move, up 3.5% on the week. So a big move higher there. Taking a look at the volatility index, interestingly enough, you think it would be down with this big move up in the market. It was actually up just under 0.5% this week. And look, there was one day earlier in the week where the market was up quite a bit, and so was the volatility index up along with it. That's something that catches my attention. A lot of folks in our industry, believe it or not, they don't watch the markets. They like see what it did at the end of the day. But I think it's important to kind of watch the nuances day to day, week to week, because you see things that catch your attention. And when the volatility index is up with the market, that is something that is something to be watchful for. The same thing like when the market is down big and the volatility index is actually down as well. When they move together, sometimes it's indicating that there could be a change of direction coming. And we'll talk more about that in a moment. Looking at long-term bonds as measured by the TLT, a basket of long-term U.S. Treasuries, down 0.5% this week, so not a lot of movement there. And when we take a look at all the sectors, everything did quite well. I mean, everything was really up between 1 and, say, 4% on the week, everything up solidly. Really, the only things that didn't move a whole lot were utilities, only up 0.6%, and communication services, that includes your phone companies, but also includes some web companies as well, up 0.3%. But everything else was up and up big. And then gold and silver. Again, another departure from recent norms. Gold was up 1.9, silver up 2.7. And look, in the last couple of weeks, when we've seen the market down, gold was up. When we've seen the market up, gold was down. Well, this week, they're walking hand in hand. Again, just something to be mindful of as far as we're watching this market and trying to discern what might come next. So what was moving markets this week? A lot of headlines, lots of headlines all over the place. Couple of things this week that really moved the markets. You had a trade announcement. They struck a trade deal with Vietnam. Instead of it being 40% tariff, like it was announced back in April, it's going to be 20%. So the market responded kindly to that. We had some economic data that was mixed. I tell you, construction spending is really tanking, folks. The housing market is really taking it on the chin right now, and construction spending was down big. Other parts of the economic data were just kind of mixed, a little sloppy there. We did have a private jobs number. The ADP number was a big miss. It was a poor number that came out. And then today we had the monthly U.S. jobs number, and it was much stronger than expected. But interestingly enough, the private sector in that number looked kind of on the weak side. So some things just to be watching for. Unemployment rates kind of hanging in where they should be. And then, of course, the other big piece of news this week has been the big, quote unquote, beautiful bill. It's a big bill for sure. I don't know how beautiful it is, but it's definitely a big bill. I'm a little uncomfortable with that, honestly, because we aren't in the best financial situation when it comes to the United States of America. So let me give you a couple of the highlights, though. There are some things that should be beneficial to folks. So the standard deduction went up a little bit for married couples filing jointly, up from $30,000 to $31,500. Not a big move there, but there was a bonus deduction for older adults, for folks age 65 and older, between $7,600 and $8,000. And I was kind of glad to see that because they were talking about removing taxes on Social Security. And you know what? I am a huge fan of that. You bust your butt, you pay all this tax into the federal government, and then you start collecting on this thing. And if you make a little too much money, they tax the crap out of that too. It kind of gets old, paying taxes on your taxed money over and over and over again. So nice to see in that deduction. That helps. The reason why they couldn't do the actual removal of taxes on Social Security is there's some special rules, the Byrd rule actually, in Congress that doesn't allow you to monkey around with Social Security and reconciliation bills. So they had to pull that out, but they added this other additional deduction to kind of help with that. So maybe that helps some folks. Then the next one, this is disgusting to me. This is something that I absolutely detest. And look, for all our clients in New York and Jersey and California, I apologize to have to say this, but the SALT tax deduction is disgusting to me, right? These folks are living in really high property tax areas, and they get these big federal tax deductions because of the amount that they're paying in their local real estate taxes. I think it's very unfair for states like Mississippi or Alabama and Arkansas to be subsidizing the high property taxes in New York and New Jersey. Anyway, that went from $10,000 limit, which they had brought down a few years ago, up to $40,000. $40,000 deduction on this state and local tax deduction. I think that's just disgusting. Child tax credit went up a couple $100, not a whole lot there. The estate tax, that's important for us at BIG. We do a lot of estate planning with clients. That went from $13.9 million up to $15 million per person. So that was a help. No tax on tips up to $25,000. It looks like overtime pay up to $12,500. Look, we've got clients that work overtime. And $12,500. That's kind of funny because a lot of these folks working overtime make a lot more than that per year with those overtime hours. Auto loan interest. This is interesting. Buy a car in 2025, you get to deduct up to $10,000 of annual interest from your taxes. So that was interesting. That runs through 2028. This is another one that I've got a problem with. The Trump accounts. So let me tell you what this is. For every new baby that's born, they get $1,000 that's going to go into an account for their benefit. $1,000 of taxpayer money that's going to go into every child's account that's born. It's going to be called a Trump account. Now, look, I got to tell you, I know who's behind this bill, and they're Wall Street guys. We're talking billions of dollars a year, billions of dollars per year now going into these accounts. Billions. I mean, it adds up. The number of children that are born annually in America, you got to times that by $1,000. It's a big number. Of course, it gives Trump a legacy because his name's going to be attached to it. They'll be called Trump accounts forever. So you'll be happy about that. And then charitable deductions for people that don't itemize. This is kind of nice. So let's say you don't itemize. You do the easy 1040. You can still deduct between $1,000 and $2,000 for charitable contributions. So that's pretty cool. Kind of helps the 501c3s out there. So that was the bill. And of course, there's some back and forth and some nitpicking and things on different issues. To me, I think the bill is bloated. I think it's full of tons of spending. I don't think it's fiscally responsible, really, in any way, shape, or form, which is no different from any bill that's been passed in the last 20 or 30 years, in my opinion. Now, on the bright side of things, we're locking down the tax cuts from 2017. There's some things in this bill that should help spur economic growth. And look, there's two ways to dig out of a hole, folks, right? You can cut your way out of a debt problem, or you can grow your way out, or a combination of both. Well, I can't really say we're doing a whole heck of a lot of cutting with this bill, but hopefully it will spur some economic growth, and that will make a difference and kind of help us get back on a little bit more solid footing moving forward. We'll just have to see how things shake out with all of that. So it's a short week, not a whole lot to talk about. I will say this, though. This market, I know it's been moving quick. I feel like every other week I'm saying something different about it. This market's extended, people. It is extended once again in a pretty significant way. The S&P oscillator scored over an 8 today. Anytime it gets over 5, you watch out. In addition to that, some of the technical indicators, ones that I track very, very closely, they're only a day or two away from triggering sell signals. just stating that the market, again, is getting very frothy. It's moved a lot, moved very quickly. And look, let me tell you what's coming up next week. All right, the tariffs, right? July 9th, the tariff deadline. And we already know that a lot of countries, the deals aren't being worked out right now. There's some talk that things are coming together with Europe, but maybe not so much with Japan. And we got this whole thing with Vietnam. Some China things are worked out. Some of the bigger ones are kind of ironed out, but there's a lot of countries you do business with. They're not ironed out yet. Oh, by the way, I told you last week that things got thrown into a tizzy because of this tech tax from Canada. And Trump said negotiations are off with Canada. They turned 180 on that. By Monday, that was no longer an issue. But my point is this, July 9th is coming next week, and that could be something that could stir this market up a little bit and give it a moment to take a step back, which I think would be healthy. It's just been up and up and up and up. And I think we could get a little bit of a step back here in the next week or two, depending. We'll see how things go. We did get a confirmed breakout this week. That's the good news. The good news is that the worst of this is absolutely over, in my opinion. I really do believe that. I said it last week, but we got confirmation this week with the market action that we've broken out to new highs. We're back up in that reestablished uptrend for the market, so that should continue. But it doesn't mean you won't get a pause or a step back along the way. And things are very quickly right back to that level where you would be expecting this market to take a step backwards. So we'll see what happens in coming weeks. Earnings are going to kick off in earnest July 15th with bank earnings, although we'll be getting some stragglers coming in. I say stragglers, some early reporters coming in over this next week. We'll be watching that pretty closely. A lot of wood to chop still, but I think everything is situated for this market to push higher over the long run. I just do think that we could get a little bit of a pause here in this positive action. And if we do get that, we'll take some opportunities to do a bit of buying for some folks. But right now, we're sitting in a really great spot, and we're just going to continue doing what we're doing. So I'm going to go and wrap up. But between now and next few minutes, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's buy that grand piano and put it in that one room in your house that's just sitting there waiting for it, Debbie. It's just sitting there and waiting for it. Maybe it's retire a little early, take that big trip. Hey, you know what your goals are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.